Hey everyone, it's Monday morning, February 10th, and welcome back to Capital Markets Quickie. I'm your host, Endrit Sella. Since it's Monday, that means it's time to dive into the big market movers for the week ahead. It's going to be a busy one, so let's get straight to it. Before we begin, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. Let's start with last week. Stocks ended pretty much flat as investors processed big tech earnings, a surprisingly strong jobs report, and of course, the ongoing tariff drama from President Trump. The S&P 500 stayed steady, while the Nasdaq and Dow each dipped about 0.4%. Now looking ahead, inflation takes center stage this week, with the Consumer Price Index dropping on Wednesday morning. Plus, we'll get updates on wholesale inflation and retail sales, key indicators for where the economy is heading. Speaking of earnings, another 78 S&P 500 companies are set to report, including McDonald's, Coca-Cola, Supermicro, and Airbnb, so it's going to be a busy one. Now let's talk about the economy. The jobs report on Friday came in stronger than expected. Wages grew, the unemployment rate fell, and December job gains were even revised higher. That's great news for the economy, but it also means the Fed might not be in any rush to cut rates. The big question now: will inflation keep cooling down, or could these strong labor market numbers keep prices elevated? That's what markets will be watching when CPI data is released on Wednesday. And then, of course, we have the ongoing tariff situation. Trump delayed his 25% tariffs on Mexico and Canada by a month, which gave stocks a little breathing room. But the uncertainty isn't over. On Friday, he said he's planning reciprocal tariffs on American imports, and Japan could be next on his list. So, yeah, markets will be watching this closely. Economists are already warning that tariffs could be inflationary, which again circles back to the Fed's rate cut decisions. Then there's retail sales, another major data point coming up on Friday. Economists are predicting flat sales for January, but the control group, which feeds into GDP, is expected to show some growth. And let's not forget earnings. Over 62% of S&P 500 companies have reported so far, and results have been strong. The index is pacing for earnings growth of 16.4%, the fastest in 3 years. So even with all the macro uncertainty, companies are delivering. But here's the thing, markets are still moving sideways. Inflation concerns popped up again on Friday when the University of Michigan Consumer Sentiment Survey showed one-year inflation expectations jumping to 4.3%. That's a big spike, and it turned the market from green to red in an instant. A reminder that tariffs and inflation are the two big themes right now. So what happens next? Well, this week will give us some major clues. Will inflation keep cooling? Will Trump push through more tariffs? And how will markets react to all of it? We'll find out soon enough. That's it for today's Capital Markets Quickie. Make sure to subscribe, and I'll be back tomorrow with more insights. See you then. Cheerio.